So, guys, good morning. Today is Wednesday, 21st of August. So, I want us to have a closer look of this pair Euro JPY. I initially posted analysis on X regarding this pair, on how it moves, and my expectation. So, right now, I want to like go deep into the pair and like show you guys how I'm actually analyzing it, what I'm expecting, the reason why I'm doing what I'm doing. So, as you all know, I usually start my analysis from a top-down approach. The reason being that I have to classify my I have to classify my analysis into trends and then entries. So I have the higher time frames uh, for spotting of trends. I have to classify them. I have to look for trends. I have to ensure that the trend correlates with the movement of the higher time frame. I don't know why it's taking a little bit longer to load, but however, let me switch from this internet to my phone hotspot, maybe to be faster. All right. So yes, I think it's a little bit better now. So this is a weekly time frame, and trust me, if we are to look at this, I don't want us to use our eyes only, but I want to show you something that really makes sense. I usually follow the impulse and corrective approach when analyzing the market to be able to spot when the trend has actually, changed, when there is a shift in trend. It's like the weekly approach, right? Now, the only way we'll consider this a total, you know, fall in the market is when this whole place is destroyed. This whole place is destroyed. Well, it turned out that the market has, danced around this area and then went back up. So from the weekly approach, from the weekly time frame, we still have this market looking like a bullish market, with what we've seen because we haven't broken below the last support. The market only came there and then we had a double bottom there. Now I'm going to switch to the we're daily time frame for us to look at it again. So as for the daily, I'm not going to do too much. I just want to show you something real quick. Now look at this trend. All right, look at this trend line. I want to draw this trend line very neat so that you pay close attention to what I'm doing and just pay attention to this trend line. Right now, let me have a diagonal trend line on the upper side so that we can actually look at it clearly and spot what we want to spot. Now, what are we trying to do exactly? We are trying to see if the market is still within our levels, key levels. Now, clearly, we saw that this market came down to this place. This was where we spotted on the weekly time frame that the market would have probably broken, but it turned out that the market came back and respected that place, and then on the weekly time frame, it went back up. For the position traders, they are still on bullish move. Now, for the mid swing traders and day traders, this pair is not actually on bullish move right now because one, we've seen a trend termination here. This trend has been destroyed somewhere here. Now let me zoom in for you to pay attention. This one is not a recorded class between me and my students. This is just me actually trying to show you the market analysis, the breakdown. Now this is where the trend terminated from. In the popular terms, you guys call it breakout, but I call it trend termination because the trend has terminated. Now, ever since the trend terminated, there is no proper retest on the daily time frame yet. All right, this is a termination. This is where it broke out from, and we've not had a proper break and retest. Now we need to have a proper break and retest such that once it touches here or somewhere, maybe here, right? Why do we pick here? Let me see if we have reasons to pick that place. This is a touch. There's a touch here. If I'm to extend this rectangle to this left hand side, that's one touch, this two touch, this three touch. I could extend it down to the left hand side and more for us to see if it makes sense, but let's see. All right, so there's nothing much there for us to keep going. So we have at least one, two, three touches here. So that means the market is likely to retrace to this level. All right, once it bounces up to this level, and then I think that is when we'll have the proper sell dropping down like rain to this downside, right? Yeah, if you retest to this level, it will make sense. I don't think this level that I want to show you. Let me not have too many arrows on the screen. I really hate it. I don't think this level is as strong as this level that the market broke out from. But either ways, let's just have it in mind that if it gets to this level, it will be like this. It will have an incomplete structure. It has not really completely moved. That means it will still need to push up to a certain level and then before finally dropping down. What can you notice? The weekly time frame is bullish. The daily time frame now is actually bearish. Now let's see if 4 hour correlates with any of this, right? So so this is 4 hour time frame, and I'm going to break it down in the most simplest approach that you'll be able to understand, not even the form, the approach that I'm going to use to break this down. Now look at this structure. Let me take it away to Let me take it to line chart so that you will see this skeletal view of this market very well. Now look at this whole neat thing, right? Look at how neat it is. Even if you don't want to use that, you can even use this tool here and then extend it like this, which saves you time. Easy, right? Then now let's pay attention to one thing. The market moved and broke out, went a little bit up, dropped, impulse, correction, impulse, correction. Now we are expecting another impulse, but there is a range. There is a range. Spot it very clearly. There is a range. I'll take it back to candlestick. There is a range. Well, then, what is the current trend of the 4 hour time frame? What's the current trend? What is the trend? Trend is equal to BRM, bearish momentum. So 4 hours, 4 hours is bearish momentum. Daily trend is equal to bearish momentum. Weekly trend is equal to bullish momentum, BLM. Now, let us see something. Let us also understand that in bigger trends, we have smaller trends. All right. In bigger trends, we have smaller trends. Now, this is me trying to figure out what really happened here. Let's see. Let's see if we can actually capture this wave very well, such that it would make sense for us. Okay, right here. This guy was actually, trying to range to the upside to a point of having a proper retest that would correlate with the daily time frame. Excuse me. Now, it happened that it has not gotten to this level, and then there was also a break below. Now, look at what happened here. This is a break and retest on the 4 hour time frame. That is a breakout and a retest on the 4 hour time frame. This is actually very feasible. This is a breakout. There's a retest here, and then now this market is on a range. So there's a tendency that this one might actually now take it towards the upside. Now, why do I actually feel so? I'm not trading what I feel. I'm actually doing what I see, because now this is a higher low here. It has created a higher low, and it will take this also as a higher low. This is sentimental approach of analyzing the market. Sometimes you have to be sentimentally inclined in order for you to see the market, and then you don't just trade everything you see. You have to, you know, we evaluate some certain things and see beyond just what the normal eyes can see based on experience. This is a higher low here. Higher low, higher low, higher low, which makes which has formed an outer big trend towards the upside, telling you that the internal one was a ranging consolidating market towards the upside. So it now gave us an outer trend that has at least three touches, meaning that tendencies are this guy might move towards the upside before finally dropping down if there will be any such force. So it tells us that this trend that we have here is even too small for the market to make a proper push towards the downside. So it needs to move very well to the upside and get its energy. Now, take for instance, you have a tennis table. We have this standard tennis ball, not the usual medium tennis ball that is white. We have this green lemon tennis ball that when you hit it on the floor, it bounces up. Now, imagine a case where you hit the ball and it does not hit a rooftop. More like the push from the upside to the downside would not be as greater than when you hit it on the floor. I don't know if you get it. Like you bounce the ball from here now. If you hit the ball here, let's do an illustration. Let's have this is a top roof of our ceiling or PVC POP. This is the down floor that we are stepping on. Now, if you bounce a tennis ball on the floor, if it does not hit this top roof, the force that it would bring back down will not be greater than will not be as greater than the one you hit it with. Now, the returning force will not get to the first level of the initial force, and then it will keep going like this. It will keep reducing. It will keep reducing. It will keep reducing. It will keep reducing to the point where it won't even have anything to push again. Now, alternatively, let me do away with all of these whole objects. Alternatively, if you have your POP, PVC, ceiling, whatever, and this is the floor you're stepping on, and then you bounce that ball very hard, and then it touched here, it will come back like this. It might even go back to almost touching this thing, or if you touch it, if you hit it very hard and it touch your POP, PVC, your ceiling, there's a high tendency that it will go back and touch it, and then comes back, and then it will start reducing. It will start reducing. It will start reducing. It will start reducing. Now, what I'm trying to tell you is that the greater the force, the higher the push. The greater the force, the also higher the pull. So now, if this guy does not touch somewhere with a high force, like a ceiling at the top, the selling pressure would not be high. Do you understand? The selling pressure would not be high. So I spotted this on today's trade, and then I took a buy. I took a buy, right? The reason why I took a buy there is because it has already started forming higher lows, higher lows, higher lows. We have higher low here, higher low. It turned out that this last wave, this last move, closing this market had broken below here. Do you understand? I wouldn't have bought this market. Do you understand? I wouldn't have bought this market because I got into this market somewhere here, somewhere here, somewhere here, yeah. And trust me, that was on 30 minutes time frame, and my stop loss is somewhere here. Hmm? It's not really that difficult. So left for me, look at something. Now we are zooming in. Initially, this was a large move, a large move. Eh? Now, I want to teach you something for free. In a situation where you have a corrective, this is an impulse move. Now, this was supposed to be an impulse move, corrective move, impulse move, corrective move. Let me show you, let me show you, let me show you real quick. Impulse, corrective, impulse. We were supposed to have a corrective move at least to somewhere here before dropping. Now we had a very large wave that went back to the starting of the largest impulse move. That means there is a change in the momentum of the market, gentlemen. If you could remember what I showed you about the table tennis analysis, the second phase where we had the ball touching the PVC, POP, the ceiling. This is exactly what I'm trying to tell you. Now it will drop. There's a tendency that if this one had gotten to this level, maybe immediately the force of push will be greater. But right now, it's not like the force of push towards the wrong side, right, will be greater. But right now, it didn't get there. Now there is force of pull towards the upside, dragging it up is actually going to be because of the price that the market is currently trading on. Because one, there was no energy for it to break below this last price. Since it's actually selling above that price, right now we have a price greater than the last price. So right now the price is becoming to get a little bit higher. There's nothing low here to price. So now we are everything we sold off here to this level, we bought it again. And right now, since we bought it very low at this point, this was the lowest this market got to after that last drop on 4 hour time frame. After that last drop, after this last drop, right now, this is the lowest currently. This was the last low, and then second to the last low. So now this market could not break below this price for us to know that it's going to break this price. It didn't even go close. Do you understand? Like it didn't even stand a chance. So since it did not stand a chance, we realize that it has created higher lows. It has begun to create, supports. And what does that tell you? It tells you that when market begins to create support, higher lows, it has tendencies of pushing towards the upside aggressively, right? So for me, I want to set this. I want to catch a very big move here. I want to catch a very big move. This would be like my TP. But then I have to break these whole moves down into TP1, TP2. I have to keep this one here, very simple. TP1 to be around this level because it's like 104 risk to reward. Why do I have this as the first TP1 level? Because of these too many touches here. This place has too many touches. Look at this place. It has too many touches. I don't want to have too much objects on the screen, right? I want to keep it very, very neat for you to see. So we've had support zones forming here, and then we've also seen that the market has not sold below the last price. Do you understand? Plus, one of our reasons why we are going long is because this market went back. This move was evil. The market went back from here to almost the same height. This is now an impulse, right? This is now an impulse. This is now a corrective move. Automatically, it has changed structure because it has broken above here. It has even broken above where this market broke from. So all this whole thing that the market did here is invalidated right now. All this whole problem that the market did here is invalidated. It is invalidated right now. We can even still set a buy there and set stop loss here, right? We're still good. We can still, even as we have entered, even if we want to take our stop loss from there down to this place, this is even the safest spot right now. This is the safest spot to buy this market, to set our stop loss. This is the safest place to put our risks, our stop loss level. Take profit. You can extend it if you want, right? You can extend it as much as you want. Now let me delete and then show you another side of the coin. Now I will take my Fibonacci retracement tool. I will place it from this place to where it stopped buying. Now, yeah, it has gotten to my 61% level. Now, if the market, and now I have three levels in the market that I buy or that I respect so much, I obey. Now, I have the 38.20 level. This is a medium pullback. This is a 50% pullback of the original structure. Now, 61.8% is a deep pullback, meaning that the next move is going to be let me use the word massive. It's going to be massive. Oh. It's going to be long. It's going to be times two of this initial move. It's going to be twice, in fact, or one and a half of this move, because of this 60% level that this market got to. Because of this 60%, I'm combining this with impulse move. Elliott wave concept to speculate the market's movement and know how long it's going to take. Except it comes back and then destroy this place and keep coming down, no problem. But right now, this is going to be our stop loss level. Below this place, below this 60% level is our stop loss. Sorry, 61.80%. So I use this also to see my analysis and then understand how my whole stuff is going to be and if my stop loss placement is good or not. Now, if you pay attention very closely, the market did not even do anything on 38.20 level. It got to 50% level. I think it didn't even do much. That was when it was trying to do this internal movement here, this one. But then it deceived people and then danced around, and touched 61.80 level. And now it started moving towards the upside. Now, another thing to also look at, candlestick pattern now wants to play its own role. Let me delete all this thing. Let's have the candlestick concepts, right? Now we have a minor closure, minor candlestick closure. What do I mean by minor candlestick closure? Now, see this candlestick here. This candlestick closed almost above this one. Now, the reason why we are having this a little bit of price dancing around here is because there's going to be a little bit of range on the lower time frame, like 30 minutes and 15 minutes, before the market will continue towards the upside. Now, we might have another candle from here, dancing towards this level, and then from this place, it will create a low level or a lower time frame, impulse move. It will create a low time frame impulse move. What do I mean by that? Like higher highs, higher lows rather. It will create it on lower time frame as well, and then move it to the higher time frame so that it will have the impact it needs to push towards the upside. It might even dance around and then come back here, and then if it comes back to this level, you will even be seeing something like head and shoulder on this level. It might come back to this level and then threaten to take your stop loss away, and then boom, it will shoot. So anything can happen, because when I'm looking at the market, I'm looking at where are all the possible places that the market is likely to come to, and what am I expecting on each of these levels, so that if it gets there, I will already say, okay, I've already had it in mind that this guy is likely to form a lower time frame head and shoulder before taking it up again. So if it forms that head and shoulder, well, no, let's go back up. Except this market breaks below this thing and then break below this last low, and then we'll know that fine, our analysis is not valid. So, gentlemen, on this note, I bring to you my own, market speculation. This is not a financial advice. It's just a way of me showing you how I see the market, how I analyze the market. And for those of you who have been on my DM, on Twitter, on Instagram, asking for mentorship and all, this is also for you to pay attention to. If you've been struggling and then looking for more, insightful way to see the market, this is also for you. And I would have actually showed you what I did on GBP USD, but I don't think this episode is for GBP USD. But this is just a clear analysis of the trade I took on GBP USD and the sales. This was a breakout of this channel, of this bullish flag, right? And what is my expectation? My expectation is not really that huge, right? My expectation is a 50% retracement on the Fibonacci 2 level. I'm expecting at least 50% drop on GBP USD. I expect it to drop up to this level. That's why I'm having my TP there. and I got in somewhere here since yesterday. I've been holding this trade. I think I got in earlier than this though. I got in earlier than this. So I was risking around 40 something pips to get over 177 to 174 pips TP. I've been holding these sales since yesterday when I got in. Let me check my phone as to show you exactly when I got in. Okay, so I think I got into this trade. What's today's date? Today's date is 21 and yesterday was 20. So I got into this trade on the 20th. Mm, that was around 6 o'clock. Yeah, I got into this trade around 6 o'clock. Yeah, 6 o'clock, 6 p.m. was when I got into the sales. So I've been holding it for complete 12 hours, right? 12 hours. So from 6 p.m. to 12 a.m. is 6 hours, right? Is it? 6, 7, 8, 9, 10, 11, 12. Yeah. Then from 12 again to. I've been holding it for 12 hours. It's not 24 hours yet. I've been holding it for 12 hours. So it's not easy. All right. So this is like a swing, a little bit of swing and intraday trading. So I just got into this sell yesterday, and this is what I'm seeing. I might be wrong, but trust me, this market cannot just keep on going towards the upside, because what I spotted on the daily time frame was a double top. I spotted that double top yesterday, and that double top is what I'm holding. That double top, trust me, is a strategy on its own that it doesn't really happen often like that. But when I spot a double top on daily and then on any pair, and then you're able to get into this double top sales, trust me, it's going to be a hell of a ride. Now, why did I choose 50% level? Because I feel within 50 to 61% is when we'll have the proper pullback, and that is where we'll have the greater touches. Look at here, we'll have a touch here, we'll have a touch here, and then if I'm to also keep going back in time, we'll have several touches on that level. And if it touches this line, it's not going to be like a disrespect to the structure of the bullish markets or bullish momentum that we are having. It's going to be like, oh, it's still respecting the uptrend, because this guy just recently broke out of this channel. Even if it comes to 61.80, it's still not a disrespect to the structure. It's still respecting the structure. And I think that is going to be like the deep pullback. All right. So that one was just a bonus. For now, yeah, this guy is still doing his thing. So this will be the end of this recording. If you like what I shared, please make sure you hit the subscribe button and like the video. You can also share with your friend, someone who is actually struggling to also have an insight of how to analyze the market. Thank you.